Welcome to The Explainer. Today, we're jumping right into the bull case for crypto, pulling our analysis straight from the popular channel Altcoin Daily. Let's get to it.
So, the source material kicks things off with a bang. A massive quote from investor Michael Saylor. He doesn't just think $1 million Bitcoin is possible. He calls it inevitable, maybe even in the next 10 years. That's a huge statement, and it really sets the stage for the high-stakes world we're about to explore.
So, where is all this confidence coming from? Well, according to the source, it's not just one group. It's more like this powerful pincer movement, with adoption coming from two totally different worlds: the giants of finance and the biggest names in pop culture. What's so fascinating here is the contrast. On one side, you've got the absolute titans of traditional finance. We're talking BlackRock, JP Morgan, Citigroup, all building out their crypto infrastructure. And on the other side, you have these massive cultural forces like the YouTuber Mr. Beast and literally millions of Super Bowl viewers getting exposed to this world. It's a wave of adoption coming from both sides at once. The source really zeroes in on the mind-boggling reach of someone like Mr. Beast. 1 billion followers. If he really is moving into financial services, that could be a gateway for a whole new generation to get into crypto on a scale we've just never seen before. This is what Main Street adoption looks like. And look, this isn't just about Wall Street buying a little Bitcoin. The institutional move goes way deeper. The source points out that huge players like JP Morgan are actively building on blockchain technology itself. You've got leaders like Jamie Dimon saying it's a better way to build a bank. For them, this technology is the future.
Okay, so beyond what's happening right now, the analysis points to 3 very specific things on the horizon that could just ignite the next major bull run. Let's see what they are. So what are these game changers? The source material looks past the current trends to try and pinpoint exactly where the next big wave of demand and, value might actually come from.
And here they are. First, this kind of sci-fi idea of AI agents needing their own money. Second, a pretty compelling argument that Ethereum is seriously undervalued right now. And third, something we've all been waiting for: clear pro-crypto regulations. All right, let's unpack that AI idea first. Analysts like Anthony Pompliano, who's cited in the source, argue that as AI gets more and more autonomous, these agents are going to need their own native currency. I mean, think about it. A piece of software can't exactly walk into a bank and open a checking account, right? This could create a totally new, massive demand for digital assets to power this machine-to-machine world. Next up, Ethereum. The source highlights analysis from Michael van de Poppe, and his argument is simple. There's a massive gap between Ethereum's current price and what it's actually worth. In his eyes, the market just has it wrong. And this isn't just a gut feeling. He's pointing to a very specific metric called the MVRV ratio. And here's the kicker. Historically, whenever this ratio has hit the level it's at now, I'm talking about moments like the COVID crash or the absolute bottom of bear markets, it has basically been a giant flashing sign for a tremendous buying opportunity right before Ethereum's price takes off.
And finally, regulation. I know it usually sounds like a drag, but the source frames the push for clarity, like with this specific act, as a huge tailwind. The idea is that having clear rules of the road removes all the uncertainty and gives big institutions the green light they've been waiting for to really enter the market in a big way. But, of course, we have to be realistic. It's not a straight line up. The crypto market is famous for its volatility. The source gives us a little reality check, explaining that the recent dips aren't caused by just one thing, but by a whole bunch of factors all hitting at once.
This slide really shows how complex it is. It's like a perfect storm. You have the OGs, the long-term investors, selling to take some profits. You've got the aftershocks of major liquidations that force selling. You have wider fears about the Fed being more hawkish, anti-inflationary. And on top of it all, you just have a general sell-off where stocks, gold, everything is down. It's that mix of pressures that causes those sharp moves. So with all that short-term noise, what is the long-term vision? According to Michael Saylor, the ultimate goal isn't just for Bitcoin to be another asset you trade. It's for it to compete directly with gold and eventually to surpass it. The narrative here is that we're basically watching history repeat itself. When gold got its own ETF, it was suddenly easy for Wall Street to buy in. It became institutionalized, and that led to a steady, multi-year climb.
The argument is that Bitcoin, with its new ETFs, is on that exact same path to becoming a globally accepted reserve asset, digital gold. Right now, there is a massive gap between the market size of gold and Bitcoin. Gold just dwarfs it. But for the bulls, that gap isn't a weakness. That's the entire opportunity. Because the vision that's laid out in the source isn't just about catching up to gold. The long-term thesis from Saylor is that Bitcoin will eventually become 10 times bigger than gold over the next few decades. I mean, that would fundamentally reorder the financial world. So here's the most important point. In this bull case, Bitcoin isn't just some hedge against inflation or another tech stock. The end game is for it to become the base layer of the world's financial system, the primary reserve capital that everything else gets built on. The case presented here paints a picture of a really profound shift in finance and technology. But it also leaves us with the ultimate question, doesn't it? Are we witnessing the foundation of a brand new financial world, like its supporters believe, or are we just in the middle of a massive speculative bubble? The answer to that is going to define the next decade of finance.